This video is going to be on daily bias and where price is most likely going to go. We will go over these things right here to kind of give a framework, and then I'll explain why we look at those things. The first thing I look at is previous liquidity taken. The reason for this being is once we take liquidity or accumulate it, we want to distribute it higher or lower, right? So if we take liquidity down here, we want to distribute it higher. Take liquidity up here, want to distribute it lower. Next thing I look at is swing highs, swing lows, short-term highs, short-term lows, relative equal highs and lows, putting those out there. That's just where people are going to have their stops above. So it is important to notice them because that is where liquidity rests. After that, I look for market structure shifts and imbalances. This will show me a change in trend. We have a short-term high put in right here. It breaks it with displacement, and then an imbalance, fair value gap put right there. Next thing I look at, just are we at equilibrium, premium, or discount? Right, once we take liquidity here, we want to distribute it at a premium. If we took liquidity right here, we want to distribute that at a discount. Next thing I look at, just lower highs, lower lows, simple swing highs, swing lows, just to see where we're trending. So you can see lower high, lower high, lower high, lower low, lower low, lower low. So you can see we're trending down here. However, after this market structure shift, we put in a higher high. So potentially if we put in a lower low here, we can continue upward. So what does that mean for my daily bias? So I kind of clean it up and just look at the closest imbalances and liquidity. As you can see, we have this super equal high level right here around 4,300 that has been kind of my target since we grabbed the liquidity down here. The thing is, after this market structure shift up, signaling a change in trend, I want to see a move back down a little bit to grab liquidity and move higher, right? So let me grab my pen. So I want to see a move down to grab this liquidity that rests under here, potentially even into this fair value gap, before a move higher to take that out. On the 1 hour time frame and lower time frames, I am bearish until this liquidity is grabbed, and then back to being bullish here. You could just wait until it's grabbed and then continue bullish. So moving into the hour chart here, you can see we have these relative equal lows here, right? Liquidity is resting under that. That is our target for the week before, I switch back to being bullish. So marking out the other highs and lows, that is where more liquidity rests. So I want to see those taken. So going down to a higher time frame, like I said on the daily, we want to see a move down below here to grab liquidity. That means I am bearish on a daily time frame until then. What does that mean for the trades I am looking for? When I am bearish, I want to see, that false move up to grab liquidity and then distribute it lower or go down lower and grab liquidity down here. So marking off the highs and lows and imbalances on the 15-minute chart, you can see we have these relative equal lows here. Liquidity grabbed, moved higher, breaks these short-term or these relative equal highs here along with this one, grab that liquidity, and then move lower. So I ideally want to see this continue lower down to 40.70 before picking up more longs and then heading back up to 4,300. So just a little overview, once again, on how to get my bias. I look for just liquidity. Where is the easiest path for it to go? A lot of that has to do with relative equal highs and relative equal lows because a lot of stops rest above or below them. So on the daily chart here, you can see that we have relative equal lows. Take that out, grab liquidity, go above here, and you distribute it, and then you can sell short into there, and then target more liquidity lower. The little bit confusing thing about this is overall I am bullish, right, to 4,300, but I want to see a move down to pick up liquidity before we go higher. So that makes me a little bit bearish on the lower time frames And the nice thing is about trading this way is even if you have the wrong bias, like let's say I was bullish today, we moved lower, you could have bought here and then sold up here. So even if your bias is wrong, trading ICT will keep you from, just entering trades you shouldn't be in. I hope that helped. It was a pretty quick video. Just made it really quickly before I go on a trip. If you have any questions, be sure to leave them in the comments below and I'll get to them. Thanks for watching and please consider subscribing. Thank you.